Welcome back to Real Estate Mindset. Happy Sunday evening. We got some breaking news as the stock market is opening up as far as the futures, absolutely in the gutter. So we got some history. Well, history, is that even a word? We have some historic stuff going on. So I took a break from what I was doing because this was supposed to be my evening off. I just told Mitch that I'm on the way to go to the beach right now. Literally, as soon as we're done with this, I'm going nighttime shark fishing. It is freezing cold, but I wanted to stop because the market right now is absolutely plunging. Like I said, you guys, sorry for repeating myself. I'm a little bit nervous because I wasn't prepared. And what the heck is going on? Mitch Vexler, happy Sunday evening. How are you, sir?
Well, the market opened up down massively, give or take. NASDAQ actually dropped at the open about 805 points. That's a pretty hellacious move. And then it kept going. It was actually down 1,025 at the worst. And at the moment, pardon me for looking left, it's basing. So it may have slowed down a little bit, but this is kind of what has happened in the last 3 days, rather historic in terms of the velocity, and the VIX has moved up greatly. So obviously, so I spend my time studying volatility. This is volatility.
Right. So let me tell the viewers real quick, Mitch, how we're going to do this live. First of all, you guys, everything will be chaptered before I start heading to the beach. I'm doing that 3-hour drive. Oh my gosh. But this is what we're going to do. I'm going to show you guys the headlines, and we're going to go back to Mitch, and he's going to show you guys the futures with the Dow, gold, Bitcoin, Ethereum, all of that stuff. I'm going to show you guys the 10-year, and then we're going to go towards the last segment. We're going to answer questions like, what are we going to do tomorrow? And what advice can we give to anyone that's potentially in a bad situation with the market? So the first thing is let me throw up the headlines real quick. Now, the first thing I want to show you guys, just to remind you, I don't want to say I told you so. We don't want to do that. But this is the Buffett indicator right here, showing that the stock market is grossly overvalued. So I wanted to put things in a little bit of perspective. In other words, you guys, it's got a lot more room to go. Real quick, I forgot to mention this comment on the screen. They're saying, love it. And I believe what that is showing is Japan's stock market hit a circuit breaker and is suspended. So this is hitting the world right now, but this is the Buffett indicator. On to the headlines. You guys see the first headline right here. This is Market Watch. I'm not saying this. Anytime we mention the word Trump or DOGE or Biden or anything like that, it's all kinds of downward votes on the like button. So if you guys can just do me a quick favor, it would help us out a lot. Please hit the like button below. We would really appreciate that. But take a look at this, guys. DOGE collapse imminent. It's not just DOGE. It's not just the tariffs, but here's the headlines right here, guys. Stock markets today, Dow, S&P, NASDAQ on track for Monday plunge after last week's tariff-induced rout. And bear market rally? We're going to have bear market rally tomorrow? Probably, possibly, who knows? Evercore slashes S&P target because investors, CEOs, and consumers dislike uncertainty. And again, guys, this thing is in the gutter right now. JP Morgan fixed income analyst, real GDP to contract under the weight of the tariffs. Duh, we've been talking about that for what? A month and a half? About a month, Mitch? Yeah, it's contracting. Also, Trump denies rooting for a market sell-off. Europe, Asia, dying. Mitch is going to get into that here in a minute. Dying to make a deal on the tariff. So it appears. Now, I just put out a video. So I put out a video this evening, and then I started packing up to go shark fishing, got my kayak ready. And so, you know, someone mentioned something that was, it was just, it didn't make sense. I won't even go there. I'm so sorry. I was looking at oil right now. I'm so sorry, you guys. I lost my train of thought because there's so much happening in front of me. It's so embarrassing. There's a lot of people watching. Oil prices are also plunging on fears of a tariff will spark a global recession. Let's see what else we got here. Small cap stocks under pressure as Russell futures sink. I'm so depressed that I forgot what I was about to say. It was going to be like super cool. I have too many children. S&P 500 set to enter bear market territory if selling doesn't let up. This is before the market opens. My God, this is crazy. Dow futures plunge. This is right now. This is as of an hour ago, you guys. Dow futures plunge. This isn't Friday. People are like, this is Friday, right? No. This is happening right now. This is a continuation. Dow futures plunged 1,300 points as Trump officials dismiss tariff-related recession fears. Okay, let's see what else we got. That's about it. Now I want to show you guys just real quick, and we're going to go to Mitch here. Look at this bad boy right here. Oh my God. So this is the 10-year Treasury down 10 basis points. Okay, so what that means, again, is interest rates are starting to creep into the upper 5% as far as mortgage rates. So this is quite a move right there. So that is the headlines for right now. And you guys, what we're going to do as soon as Mitch is done presenting the future information, we're going to take questions from you. And I definitely want you guys to ask questions, but if you can hold off on your questions, I would appreciate that. What is Johnny saying? This is my buddy, Johnny Travis, who made the call 3 years ago that we were going to have problems in Q4 of 2024 and enter a recession. Johnny, you did, sir. You called it, Johnny. And I want to say, brother, I love you. I miss you. Thank you for everything you've done. This is my buddy who let me stay at his house when I went on the road trip. This was before I was going with Melody. My God, it's so much better going with her. So, Mitch is going to do a presentation, you guys. And also, hello, everyone. Johnny, Deuster, everyone is here. Vovo's here. I love all you guys. Thank you guys so much for being here. I really do. So Mitch is going to go into do the futures. This is going to be one of your first presentations you're doing with your computer, Mitch. So you feeling nervous about it or what?
Yeah. If this blows up, it's Travis's fault. I had nothing to do with it.
I was loading my truck, man, when I got your text. I was loading my truck. But I'm going to throw up your screen, Mitch. We should be able to see. I'm going to remove mine. I'm going to put yours up there. There it is right there. So whenever you're ready, go ahead and break down. And if you can, give us the percentage and numbers of everything you're seeing.
Okay. So over on the left-hand column of the page that you're looking at or the monitor that you're looking at, those are the futures. And the futures are trading live as we speak. So you will actually see those numbers moving up and down. The first one happens to be Ethereum. And Ethereum right now is trading at 1383, but it's down 12%. Bitcoin down 7%. Copper, which is HG/HG, is down 5.4%. As far as copper is concerned, that's a big move. It's usually fairly stable. The forward MNQ, that's the mini NASDAQ. And as you can see, that's down 4.7. However, it's down right about now, roughly 20%, literally in the last week. So is the Dow, and so is the S&P. And as we drop down, you will see the RTY down 4.5. That's also an index. The MES is the mini S&P at down 3.83%. Oil is also down huge in that it actually hit $59 before it started to stabilize at the open. So its drop is literally down from, give or take, 72 2 weeks ago. Massive, massive move. Now, at the beginning of this, Travis said somebody was making comments, well, this is DOGE's fault. This has nothing to do with DOGE. This has nothing to do with tariffs. The market was simply way, way overbought. DOGE contributed nothing to this issue. The tariffs contributed a little bit. But the truth of the matter is, look at what's happened with the tariffs. Since they came out, 50 countries have now come in and said, okay, fine, we're going to handle this at par, which means no tariffs either side. That was the target hit. The bigger countries are going to have to get on board. And that includes China. And we have a pretty major hammer over China. And I don't want to say what it is because I don't want to give anybody any ideas, but we've got a hammer. So when you take into account all these things, what could your conclusion really be? Well, purely from a technical standpoint, if you're a short-term trader or a scalper and you can handle the volatility, you're having a field day with this because the writing was on the wall. We said this was coming less than a week ago. And we've been for months giving warnings to those who have 401ks and pension plans that if you don't know where your money is and you don't know how to hedge against it, you're leaving your future in the hands of complete morons. And what you're going to find now is that those morons have left those funds unprotected. So those are the definition of unilateral bets. They took unilateral bets with your money, and that's not good. Then Travis mentioned the mortgage rates. Well, even if the mortgage Fed funds rate drops down to 3.9, be it the equivalent of, let's call it 5.7%, as compared to last week, the interest rates aren't what the issue is. It's the inflation. In other words, the principle is so great that even if you drop those interest rates down to 2%, it isn't going to move the needle because mom and pop can't afford to go out and buy a house because of the cost of the final product, which is due to inflation. It's not that the interest rates don't help. But in reality, if the price is such that they can't afford it either way, they're not moving. Housing inventories are going to go up, prices are going to drop, and everything we're about to go through on this one chart, you're going to see that in a second. So moving to the right of that left-hand column, you'll see gold, MGCM5. That's right where I have my cursor, and I hope you can see my cursor. Well, that's at 3,000. Gold, through all of this, has been relatively stable. Silver, on the other hand, is getting its teeth kicked in. But here's the point. Silver and gold are precious metals. Silver in its history trades off at 15-1 in terms of gold-silver ratio. Right now, today, it's 100-1. It's a screaming buy. And to that point, that's what I'll be doing tomorrow morning.
Hey,
So,
I was a question for later, Mitch.
okay,
No,
fine.
going.
We'll handle it later too.
I'm kidding. Keep going.
The other thing is, ask yourself, would these market gyrations be happening if, in fact, the fraud didn't exist in the system? How much of this fraud is really causing these market gyrations? And I mentioned earlier today in the video, we've got a document coming out called Thesis and Fact, and it literally talks about the Fed funds and how they're doing reverse repos and what's underneath the hood of the reverse repos. Well, anybody who's a pro and understands what I just said will hear what I'm saying, which is, okay, that's a fraud. There's trillions of dollars of this fraud slashing around. How much of this current circumstance is attributable to that fraud? Well, it's much greater than what DOGE is doing, because the opposite of what people are saying on DOGE is that, okay, well, we should let the fraud continue. We want to keep pumping this bubble. There's no words to describe how stupid that is. You keep pumping the bubble, the problem gets bigger and bigger, and then it crashes big time to the point where it's not retrievable. At least now people can have a conversation saying, okay, we've got problems. Serious people will have to get involved in order to come up with the plan, which we've been pounding the table on, but some people hear, maybe they don't hear, who knows. But the point of the matter is, the solutions are there. They are attainable. They just simply have to go through enough pain in order to fess up and tell the truth. Yeah, we, the leadership, screwed up, but we have a solution. And that's what you're starting to see now. Now, as far as a downdraft tonight is concerned, it's really interesting, because if it bases out for the rest of the night and starts to come up, there's a gap. It's an 800-point gap between the close on Friday and the open tonight. If it goes and moves up to close that gap, there's a possibility, yes, that it would head back down. However, if it closes the gap and it's fairly strong on that close of that gap, there's a good possibility that it's found its base. In other words, it's found its low for this leg. This is the second leg. The first leg closed out last week. This is now the second leg down. In theory, could there be a third leg? Yes, there could. It's not unusual. The point of the matter is, on the precious metals, we've probably hit its plateau. On the market, no, I don't think we have. So let's talk about who the players are. If you're mom and pop and you're exposed and you don't know how to hedge, and it's now too late because your pensions are at risk in terms of this downdraft, what are the probabilities of this downdraft going up to rescue the amount of money that's been lost? So those who say, well, I have money in stock and I have a dividend on that stock. Well, we warned you about the dividends. The dividends will disappear in a nanosecond, which is exactly what has happened tonight. Why? Because the principal has shrunk much greater than the dividend paid. So what's happened tonight is you have volatility expansion, which is Vega, you have delta expansion, and you have gamma expansion. Those are your options. On the stocks, those three in combination are going to drive those stocks down even harder. So these problems are all hooked at the hip, in that mom and pop are basically unprotected. They fell for it. The teachers, they fell for it. These investment pools, oh, this is wonderful, we'll be able to retire off of it. Well, that investment pool, as compared to, let's say, 60 days ago, is now down 30 to 40%. If they were in options, they're now down 80 to 90% as of tonight. So, point that I'm trying to drive at, what you're seeing tonight, is truly the problem with apathy. People just said, well, Other people are investing in these pension funds. They're my compatriot teachers. They're whoever it is in the job that they're in. Well, we've all invested together. Congratulations, you've all lost together. This is the problem with apathy. If you're going to give your money to somebody else, you must know where that money is, what it is invested in, how much is a percentage of your portfolio it is, what, if any, hedging is going on, and you must understand the positions that they're in. It's okay to be in futures if you've got a person who's trading those futures and he's a scalper and he's got a proven track record. Hallelujah, because you're doing the opposite of what just happened tonight. You're actually making money, right? Guy knows what he's doing. He can pick a downdraft like this. He's making tens of thousands of dollars an hour doing this. That's big money. Problem is, most mom and pop can't do that. And this is truly the problem with apathy. And this goes 100% to the point that throughout life, you have to invest in yourself.
Yes.
Somebody who simply says, well, I want to learn how to trade, that's investing in yourself. I want to learn how to be a gardener, even though I'm a photographer. That's investing in yourself. It doesn't matter what it is, but you're investing in yourself. You're learning how to do another trade, another business. What you're seeing tonight in this market with this type of downdraft, as compared to the other prior 4 days, shows and proves what happens if you're apathetic and you just simply go along and don't understand what other people are doing to you, i.e. the Federal Reserve and the central banks. I'm sorry, the CADs, Central Appraisal Districts. So those two are the biggest purveyors of the fraud on the planet. You must understand what they're doing, and that is showing up in these numbers tonight.
You know, Mitch, I have some really, really good comments from people. And I want to go into silver now because I may buy some silver as well. I'm probably going to buy some silver on Monday, but there was a couple comments going back and forth that was opposing opinions on when to buy silver. I want to get your input on that because I may be spending money on silver. But did you need me to keep using your screen? Do you want to take your screen down now or do you want it still up?
No, I'm trying to bring up silver just so people can see it.
And what is, you know what, let me find those comments as you're putting that up real quick. And I want you, if you can, to talk about this. Now, the first one was right here. I'm going to read this comment for you. And then I have another comment after this, Mitch. So this is what Jason is saying. Okay. And again, to what you were saying that you're probably going to buy silver. Someone else said if silver gets to 28, he's going to buy. I think silver's at 28 now. Or what's silver at right now?
Actually hit 27. So over on the far right-hand side of the screen, you should see /SIK. That's the big contract versus the SIL. Both are really big. So, Lord, do not trade these, right? You've got to know what you're doing. I mean, this stuff moves and it's hellacious. Don't trade it. But I'm just making the point. If you want to own the physical, it hit 27.5 at the open today. Yeah.
Yeah. Okay. And calm down a second. Back to what this guy was saying. Okay. He's saying don't buy to 25. Let's see why he's saying that. Silver had tariffs factored in $3 to $4 increases. They were then exempt from the tariffs, $3 to $4 taken off, and more in this environment. Down to 25. He's cautioning because of those tariff reasons not to buy silver until it downdrafts to around 25. Do you share that sentiment, and does he have a point?
He has a point if he believes the point. I don't believe it at all. I don't really care. And my attitude is I've been buying silver in small quantities since $11. And I've always bought on downdrafts. Now, we don't get these type of downdrafts often, but you'll get the odd day where you get $1.80, $2.10. So when you get those type of downdrafts or a leg down, I've been a buyer for years. Just small quantities. I've been stepping in under the theory that eventually the problems that are out there are so large and they very well may have to switch back to a precious metal / commodity based backstop. So that's called the gold standard, what it used to be the gold standard. This may be a commodities and gold standard in order to help offset some of these debt problems, aside from just simply wiping out the debts, end of story.
You know, I want to get to gold. I got 2 comments I want you to take a look at with gold, but let me read this last thing with silver, because I think that filling in the blanks. Silver is not diving because of tariff exemption. Precious metals were never going to be tariffed. It's diving because the market needs liquidity. Everything sells off and silver and gold recovers shortly. Do you agree with what he's saying?
Yes, except for one thing. I heard on Friday from a very reliable source, who I've known for a long time. There very well may be a major player who got clipped on the reverse repo, and they're jettisoning silver futures because a reverse repo picks up assets. So it takes those assets and swaps them over for US Treasuries. The story is that he is jettisoning, or they, the firm, are jettisoning their holdings. And that's why you're getting these massive downdrafts, because it's 3 in a row and it was relatively stable up until about 3 days ago. So there may very well be a stitch of truth in that. And it's okay either way, because I'm not saying he's wrong. I'm not saying I'm right. All I'm saying is this move was so volatile in terms of the silver, such a big hellacious move. It's okay if you pick it off at 27.5 or 28 on the physical and you scale in slow. If he's right, good. You got it at 27.5. If he's right, you're going to pick up a little bit more at 25. But the odds of it going any further down below that just doesn't make any sense given the condition that we're in. And where exactly are you going to hide? This is one of the points we've been pounding the table on. You can be in real estate, right? But you better not have any debt. You can be in precious metals. You can be in a commodity, i.e. copper. If you were in oil, you just got your head handed to you. I mean, oil's been straight down nonstop.
What's oil right now? I'm sorry, finish what you're saying.
59.
It's under 60. Okay. Jeez.
Yes.
So let me bring up some gold comments. In other words, you guys,
oil's right here, 59.77. I don't know if you can see my cursor.
I can't really see it. I'm going to be buying, like I said to the viewers, I'm going to buy 100 ounces of silver tomorrow. I've already talked to my wife. I was like, oh my God, are you sure? We barely have any money saved, return to recoup from the hurricane. I was like, yes, honey, I'm sure. I'm sorry. But, I talked it out with her. And I also told my 9-year-old Lily that she needs to start buying silver because she's working. She's 9. She's working with grandma, so she makes money. And then I said that if I see you buying silver, we're going to start your first company. So I'm going to hopefully buy. This is pretty cool. But before she turns 10, I want her to start her own company. And I was thinking just like a shirt company, maybe because she could sell some like bonkers shirt, my little girl. So that's what I was thinking. But either way, look at these comments right here, Mitch. So this comment comes in. Okay, how much do you think gold is going to fall? I don't know if he's listening to us. Or maybe initially fall. I don't know. But then this comment right after that says gold is going up by 20K. Do you think that gold may fall a bit and then go up? Or what is your opinion on what's going to happen with gold?
When the blank hits the fan, everything goes to a correlation of 1, meaning everything sells. And that's what you're seeing. It's fear. Okay. But the ramification of all the debt that's out there is really showing up why gold didn't drop. I mean, gold has only come off $200 since its all-time high, and it's been pretty well nonstop. So from a technical perspective, at $3,200, you can easily expect 10 days. So 10 bars, 2 legs, like this, like that, leg, back, leg. 10 bars, 2 legs, down to sideways. Okay, it's following the correct pattern. So does that mean it's going to go up? No. Now, as far as the comment of the 20,000, I've run the math looking at M1. And the truth is, if they take M1 into account, given the debt loads, not including anything past the unfunded liabilities, and give or take, there's, let's call it 700 trillion worth of issues that are out there. And let's not even go there. Let's simply look at the M1. Well, the answer is somewhere between 40 and 80,000 an ounce. Now, they can look at it. The government says, okay, fine. We want to go back to the gold standard. We want to use a precious metal standard. So we'll bring in silver to help smooth it out, even though silver is more volatile. And we'll use an oil as a commodity. something to that effect. In Russia, they've come up with what is called the unit. And that's a weight measurement of gold. And in reality, they're going to let the US do all the heavy lifting for them. Pretty damn smart the way that they've done it. So there are things in play where the gold standard / precious metals standard may very well become reality. So that's the reason, even though I didn't know about the unit several years ago when I started, that's the reason why I've been scaling in small on these pullbacks, figuring that eventually something like this was going to happen because it needs to happen. The debt load simply cannot be paid off. It's mathematically impossible. There's no money. Mom and pop don't have it. Doesn't exist. Well, they have created their own problem. One possible solution is the precious metals standard / commodity standard. We'll see what they come up with. So I'm never a seller of the precious metals. I just keep acquiring. That's it. Small amounts, scale in. And even for Travis, they have silver. If somebody wants to play, it's 10-ounce bars. So you can start stacking 10-ounce bars. You can go 100-ounce bars. You can do all sorts of things, but you don't have to jump in big, just a little bit. And then just simply say, okay, fine. Right now today, so I've got my metal at 25 plus the premium. So that gives you $1.50, $2 on the premium. And you just simply take it and go stick it in a drawer somewhere. Don't look at it, because eventually, right now today, if silver, just think of this for a second, against gold, it's at 100 to 1, okay? But if it goes back to its normal standard, just for the sake of conversation, within the last 2 years, at 60 to 1, you understand that's $300 an ounce. If it goes to 15, you're $5.80 an ounce, give or take. This is real money. I mean, that's a real rate of return. Where else are you going to go to get that type of rate of return? So A, B, do you think that having your cash in the bank makes more sense than having physical precious metals buried in the backyard somewhere? See, the problem is if they keep printing money, that cash isn't going to be worth anything. That's the problem that they have created. They print money to bail these banks out one more time. We literally have the Weimar Republic. You would be insane to hold cash.
Let's well said, man. I mean, I don't ever like to interrupt you, especially when you go on your rolls like that, but there's just so many comments right now. It's so many people saying certain things, kind of and I want to talk about Fed policies, and we only have a few minutes left because I have to get out of here. But
no, don't do that. Yeah. Don't take cash in.
I'm not. No. Yes. Okay. Yeah. Okay. Well, I want to pull up some comments on silver, but yes, I wanted to talk about this. Yes. Mitch was very clear. You have to understand the specificity of the things that we're saying. Okay. It's not just we're broadly saying things. It's extreme specificity. He specifically said, if you have no debt and you have money in the bank, then invest in silver. So do not charge your credit cards and buy silver, especially if you plan on going bankrupt and doing a Chapter 7 and walking away from that credit card debt. I'm not going to talk about that. But also to my buddy, I want you to talk to my buddy. This is my buddy right here, Raymond. This is my friend. He started a YouTube channel. He's doing really well. I've been watching Raymond grow for quite some time. Now, Raymond's concern is that, and I want you to talk to him and people like him. He's worried that through this crash that everything is going to buckle, including silver, and it may go down to $10. What are your thoughts on the probability that there'll be a total collapse in precious metal value?
None.
Why is that?
Because there's a cost of production and you can't produce it for less than 17 an ounce. That's the first thing. Second thing is, that's why you scale in over time. And if it ever hit 10, even 17, I would be buying it by the pickup load, literally.
Really?
I would buy it till my hands bled.
That's crazy.
I would be hitting the buy button on the calls. I mean, you name it, I'd be buying everything in sight because you can't produce it for less. And that's kind of an interesting point in that the way I've always looked at it, would you take the time necessary to go and dig rocks, pull the silver out of the rocks, smelt the silver, market the silver? Like a normal person can't do that. So you see, that's the value. And that's one of the reasons why metals for thousands of years are actual money. It's not that easy to produce. Gold is not that easy to produce. So that is why it's held its value for thousands of years. It's gone up and up and up. And the average rate of return on gold on average is around 8% a year. Beats the hell out of US Treasury. So even if it's sitting there, it's a store of value. It's money. The cash you have in your wallet is not money. It's a credit. It's paper. It's a different thing. So the way I've always looked at it, okay, fine. Would I rather have my cash in the bank? Now, obviously, you got to have a certain amount to operate your companies, et cetera, obviously. But from a standpoint of excess cash, would I rather have it in the bank, or would I rather have it outside of the system? You're better off right now today, as you can see by these type of downdrafts, because there are going to be people tomorrow morning that are going to hit the panic button. So even though tonight it may start to base out and come up a little bit, at the open tomorrow morning, you're likely to see another major downdraft. That's just what happens. People panic at the open and bam, down it goes again. Well, if you wanted to sleep at night and say, okay, if I have 20% of my assets, for the sake of conversation, in precious metals, it's outside of the system. Nobody can take it. Can't even find it. You pretty good odds you're going to sleep much better at night. You don't have to worry about the tornado that's going on around you.
Speaking of Dallas, right? That's why your insurance has gone up so much. Mitch, I'm losing time here, and I want to get to a couple of these comments. It's just we're running out of time. I want you to make prediction number one. Okay, prediction number one. On Monday, is there going to be such a sell-off that there will be a circuit breaker? Do you think that they're going to stop selling? Do you think there's going to be a circuit breaker triggered on Monday?
I've been around long enough to see the circuit breakers. Given what I'm seeing now, probably not, because it looks like the base is forming, and it really does make sense for the base to be forming. I was just staring at a 1-minute chart over to the left. My office is not set up as a YouTube studio. Obviously, it's a real working office. So sorry if I look left, but that's to answer his question. That's what I had to do. So if it bases, I think all said and done, we've probably hit the bottom of the second leg. It's not to say that there couldn't be a third leg, but there will be some good news that will come out sometime tomorrow from the White House. So and so said yes, and it'll be a major player. Because remember something, this isn't just happening here. This is global. The sell-off is global. It's in London. It's in Japan, right? So it's enough to make people freak out. The other thing we wanted to say here is for those who are in the market, whatever you do, don't panic. Don't hit the sell button. You've got to understand what your holdings are and then learn how to trade around the position. And there are things that mom and pop can do to help hedge against somebody else, i.e. the people that are running your pensions. But we don't have enough time to get into that here. But don't panic. It doesn't do anybody any good.
Well, too late for that. I already hit the panic button when I hit record. I'm just kidding. I didn't. I mean, I've been living my life. I've been living my life, cutting down on my bills. I'm not leveraged up. I mean, I have nothing to panic over. Thing that I want in my life is just a happy life, normal, and I want to emphasize my relationships. Okay, hold on. Okay, there's so many good things here. Okay, so we kind of went into this, the kind of the circuit breaker thing. You want to talk about some Fed policies that led? I mean, you did already, but anything you left out as far as some of the Fed policies that led us here? I mean, we could talk about inflation, Operation Twist, quantitative tightening, bank term funding program, reverse repo, the fact that the Federal Reserve has $6.7 trillion in assets that's levered up. I mean, we could talk about whatever you want, but anything you missed there, Mitch?
The document that's coming out, the thesis and the facts, is going to lay out the case, and it does a really good job of why the Federal Reserve shouldn't exist. And we've been pounding the table on that. But the bottom line is every single time, without exception, that they spend money, which is your money, our money, to bail out the banks, they cause inflation. So the compound cumulative effect of time after time after time, decade after decade, is why we are where we are. They blew this bubble to the point where it's got zero choice. It must pop. Now, does that mean we end up with a 30% downdraft? We're not that far away right now. Certainly in oil. I mean, oil is hemorrhaging big time.
Now,
But that's good for the economy, right? It's good for mom and pop because that's a little bit less stress on them. But yeah, there's problems here.
Here's another interesting comment right here. Return to constitutional currency. Talk about it. I think maybe gold-backed currency is what they're talking about here. Any idea?
Yes, that's the gold standard, right? And that is what existed until Nixon took us off of it. And that, again, is because the politicians wanted to spend, even back then, more money than the gold would allow them to spend. And they weren't smart enough to say, we'll revalue the gold at X. The point of the matter is, if you look at all the derivatives that exist on this planet, that's over a quadrillion. That's 1,000 trillion. It's over a quadrillion. It is paper chasing paper. It is mortgage-backed securities being used, flipped, and stripped into U.S. treasuries, from which the reverse repo is a participant. It is the government and the leadership, it is their job to prohibit that from happening. A stroke of a pen can wipe out massive chunks of this fraud. Massive chunks of that fraud is massive chunks of those derivatives, the paper chasing paper. This is the stuff that doesn't go through the exchanges. This is the stuff that's not transparent. And this is the type of thing, well, you have one bank cross-collateralizing their loans with another bank. It's not transparent. You can't see it, but it's there. And that's the type of stuff. The worst of human beings comes out when you can't see what they're doing. When you can see what they're doing, all of a sudden, there's no reason to be spending this money and creating this fraud. So we have no choice from where I sit but to go to something that is completely transparent. Well, what's transparent? You only got so many ounces of gold on the planet, and you only have so many ounces of silver on the planet. Pretty transparent.
Yeah, I'm sure Peter Schiff would love that. I mean, and you're not wrong. I got a couple more updates. I want to answer the bottom question, and I have one more question for you. I'm already behind. My friend is going to kill me. But couple breaking news is here. Some breaking news. Sorry, you guys, it's late. I came out of from packing my kayak. I mean, I smell like fish and guts. I'm wearing swimming trunks right now. Y'all don't even know don't make me stand up. Y'all want to see my swimming trunks? I don't think so. But 7 minutes ago, so to confirm what we had posted on the beginning of this video, Japanese stocks down sharply after futures briefly halted by circuit breakers. So that was true. That was not a rumor. And this last thing right here, very interesting. S&P 500 headed for the worst 3-day stretch since 1987. I say it's probably time for mom and pop to start paying attention. Mitch, I took your screen off. It's just you and I now. And just real quick to P Nice, I wanted to keep this more about the economy with Mitch here, but this is my buddy P Nice, man. I mean, I love my original. I mean, this is my OGs. I got all the OGs in the chat tonight. You guys uplift me so much. You have no idea. But I wanted to say real quick this is a housing market question. Do I see home sale inventory going up? And erase the bot. Yeah, I see it going up, not necessarily because of what happened now, but because it's been going up because there's not enough demand to absorb that inventory because of two things, price and also payment, obviously. So I absolutely see inventory going up in the future, especially if if there's a recession and layoffs. If there's a recession, layoffs, it's going to go up. But the biggest thing of all, and what happened at the second half of 2022, you have to remember this, is the sentiment. Is the fear and the panic. And if the public is in fear of losing their job and panics about a recession, then inventory is going to skyrocket and you'll see prices go down very quickly, like we saw at the second half of 2022. People forget that because we ended 2022 up because the beginning of 2022 was home price growth still skyrocketing. And then obviously quantitative tightening, the public panicked, bank term funding program. I can go on and on about this. That's what I see happening. P Nice, that's a great question. Here's one for you, Mitch. We're past 8:30. No other breaking news here. Do you want to talk about, because we covered it, we did a video. We did actually 2 videos today. We released one, but do you want to, since you're a professional and part of your job is to review commercial real estate, see if you can save it, see if it's in distress, see if people should buy it. So you're an expert with commercial real estate. Do you want to go in and talk about commercial real estate and how that might impact banks and those banks basically leading to a bank failure?
Any bank that is holding 15% commercial real estate to book value will be bankrupt. That's what's going to happen. And that means that those assets will more than likely be taken over by some sort of FDIC type equivalent. Those banks will get taken over. The assets will be jettisoned. So coincidentally, a very close friend of mine out of Chicago called me on Friday and said, okay, I'm not seeing anything yet, but I'm locked, loaded, ready to go. What do you see? So we compared notes. He's got an interesting multifamily building. It was just completed a year and a half ago. It's on its way back to the lender. That lender is out of Chicago. What's so interesting is the quality of construction is such that when he sent me the information, which included an actual video of the thing being built, some of the walls, I wouldn't buy that with anybody's money, even though it's a year and a half old. It was built with non-skilled labor. So people have to be very cautious. You may think you're getting a bargain, but in reality, you may be buying a huge liability. And there was another transaction like that several years ago here in Dallas. It was a steel deck parking garage. And one of the units at the end of the building was 580 feet away. You could hear the cars coming into that steel garage, steel deck, 580 feet away. The design was so bad that the deck was the equivalent of a tuning fork. I don't know if you remember when you were in school, you see a tuning fork, you whack it on the desk and the thing just vibrates forever. That's exactly what was happening. That deck had to be taken down. So again, people have to understand what they're buying.
Is this a tuning fork, Mitch?
Yeah, just like that, except don't smack that. That looks like glass.
This is quartz.
Quartz, yeah. Well,
yeah,
but if you can imagine that in metal and you whack it on the desk, you have a vibration. That's what happened to that one. That was here in Dallas. So again, you have to understand what you're looking at. Are the bargains coming? You betcha. This is going to be bad. But I said on a video a few weeks ago about a property that came our way in downtown Denver. Absolutely stunning office buildings, 30% occupied. Problem is the math doesn't work. In truth, the buildings are a teardown. Give or take 380,000 feet straight up teardown. Now, what are they worth? Well, land minus demolition, minus the cost of carry until you can figure out what to do with it. But if you go into downtown Denver and think you're going to build multifamily, you're crazy. What do you do with it?
Mitch, I want to wrap us up here. Real quick, though, to Charles. Charles, thank you for commenting. Charles has been around for a long time. You guys know I have a special place in my heart for everyone from the original real estate mindset. But real estate is actually more recession resistant than other investments. And I just want to say this, Charles. I agree with you. Normally, you're right, except when what? The prices exceed median household income. And right now, the PE ratios and the national payment to income ratios is off the charts. That's why I would say that right now it's going to crash, brother. I mean, we're going to have price discovery once we have transactions. We'll have more transactions once what goes down? Prices go down. So I think that's the way for the housing market to get more transactions. When it crashes, then more people will buy. But Mitch, real quick, I want to get us out of here, but I wanted to show the viewers, and if anyone has a home right now, if anyone's a property homeowner, don't forget, you guys, I do have our first seminar, Learn How to Protest Property Tax Home Value. This is this Saturday, April 12th, starting at 10 a.m. to 1 p.m. It is limited. I still have a few spots available. It's for 32 people. The link is in the description. If you guys want to learn how to protest your property taxes, join that seminar. And don't forget to join the Real Estate Mindset Empowerment Center. This is the first of its kind community where we have free courses. Our entire foundation is about helping people, whether you're a current property owner or you're a renter. We have so much material that I want you guys to use. Courses, free digital downloads, so much free stuff. Nobody else has what we have, but it doesn't matter if you don't use it. So definitely join, sign up for that seminar. And Mitch, can you talk to the viewers? And I want to end here, but what are your plans in the future as far as, what you would like to do with the community? Can you go into kind of where you see yourself maybe in 6 months to a year, as far as how you're going to help Real Estate Mindset community analyze commercial property?
We have to have a discussion with all the viewers as to what it is, because it's such a broad range of people. and we'll build what it is they need to get them where they need to go. The first course / seminar is step one. Obviously, all the data that we've built and the library that we've built on both Travis's site and then the mockingbirdproperties.com/DCAD, DCAD site. Those are major libraries that, as far as I know, nothing else exists. It even comes close. So we're going to continue to build upon that, push out as much free information as humanly possible. But obviously, Travis's channel has got to make a buck. Otherwise, that channel disappears. So we're working on that. But over the long haul, that's the goal. So Jeff Mashburn has got 2 courses that he's working on now, one of which involves insurance. It's a favorite topic of his. So there's people, and more people will be stepping up to help build what it is that they're passionate about, that they can truly articulate and back up with statistics. And it builds upon itself. And again, that's something that just doesn't exist anywhere. You can't have these type of conversations with anybody. What you get on the likes of CNBC is a frickin' opinion nobody gives a damn about. And it's always wrong because they're politically motivated and they don't have an ounce of intellect and they've never done anything. They're just reporters. That's not the case. And if somebody's interested, everything I've done is on my website. And obviously I'm out there so you can see who I am and what I've done. And the same thing with Travis. We're completely transparent, nothing to hide. That gives us a huge advantage over pretty well anybody that's in the business. They can't do it because they haven't done it.
Yeah.
Everything we've been talking about, I've done. I've been there, done it, built it. There isn't much I haven't built. I've built as high as 35 floors. So been there, done it, seen it. And we talk from the perspective of, okay, if this was us, what would we do? And here we are.
Absolutely. And you guys don't forget, when I'm done with this video, so we hit end, go to the description, and I'll also pin it to the comment section. I'm hoping to start seminars. I'm hoping you guys are going to like them, but sign up for that seminar if you own a house and you want to file your property tax. I'm going to get him out of here, Mitch. Oh, look at, see, I knew it. My friend is calling. He's like, where are you at, man? We're going to go shark fishing. Blah, 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 blah. Sorry, Julian, we're going to go, man. You guys, just this last thing, in about 4 hours, so midnight my time, I'm going to be kayaking in the freaking ocean during a cold front with storm. There's going to be waves. I love it. It's what I need. That's why I'm so good out there in the field with like the hurricane and all that stuff. I mean, I love getting beat up, man. Well, actually, let me take that back. Now that I'm in my 40s, I'm starting to love it a little bit less because it takes longer to heal. But this is the last thing, you guys. I just wanted to say to each and every one of you as viewers, we cannot do this without you. From the bottom of my heart, thank you for following along. We want you guys to do well. Please don't take anything we're saying the wrong way. Mitch and I are for team mom and pop, not Trump or Biden, nothing like that. I want you guys to know, don't be hypersensitive. Understand we're trying to lead you guys by example, and we love you and we appreciate you and we want you to do well. Good luck on Monday. Mitch, anything you wanted to add before we go?
Yes. Silver's up 76 cents. So
Okay.
It came off of 27.20 and it's now at 29.9. That's $29.96. So you see, it's basing. It's up. So
okay,
even gold is only down 8.20 now. It was down 35. So there is a base setting in. Doesn't mean that it won't go back down tomorrow. But for right now, it seems to be finding a base, and there's a high probability it'll hang around for a while.
Okay. All right. Well, you guys heard it from Mitch. We'll see if there's a circuit breaker tomorrow. Be safe. Be careful. I'm going to buy some silver more than likely, but not, I'm not drowning in credit card.
But now it's not fun. Now we got to wait.
We got to wait now?
Well, you got to wait at least, ideally you want to get $1.50 down. So anywhere in that $28, $27 range. Yeah. I mean, I'm still buying in the morning anyway. So I expect
wait a minute.
Bit of a downdraft.
So you can buy and I can't buy?
Well, like I said, you're at 29.9. Okay, you just hit 30. Okay.
Gosh,
so you've gone up $3 since we started this. So if you keep talking, the price is going to go up even further.
You guys stop buying silver. Wait till I buy my silver. My God, you guys are driving up the prices already. Jeez. I'm just kidding. Mitch, I appreciate you, man. Hang on. I'm going to get him out of here. You guys, again, good luck out there this week. I'm going to have a video in the evening about mortgage defaults. Look out for that. And if you guys are out there investing in yourselves, you guys already know we wish you luck and we hope you win.